Boom, welcome back to the channel, everyone. Welcome back to PokeMarketLab. We're talking about some market fundamentals today, and I think this information, while sounding boring at the start here, I urge you stick with it. This is the kind of information that truly separates the wheat from the chaff, the people that are successful versus the people that fall into these traps sometimes. So sit back, relax, and welcome to PokeMarketLab. All right, I hope all of you are having an awesome 4th of July. We're talking about market fundamentals, supply and demand. We're talking about the current quantity you see listed on TCGPlayer, how that drives human psychology, how that drives and then in turn drives market fundamentals and market dynamics here. Again, I know this is not super exciting stuff, but I urge you, this is the kind of stuff when I talk about making, fundamental choices about whether we should buy a product, whether we should sell a product, hold on to it, whatever, what have you. There are very few things in a subjective hobby like this that we can look at. This is one of them. So again, I urge you, stay tuned and let's start diving into some stuff here. So let's level set something real quick before we get into too deep into this. The depth of market that we talk about on TCGPlayer is just that. It's a willingness of people to sell. It's not a representation of sealed population. You can't use it like that. And you can't, there's some people out there, I've heard of some PokeTubers falling into this trap saying, hey, look, there's 50 boxes listed online. It's selling at 2 boxes a day. So we have about 2 months left of product before there's nothing left on TCGPlayer. That's not how this works. This is much more dynamic than that. The demand and supply and the represented and the price that comes from that, right, is going to pull both buyers into the market and sellers into the market. So quick example of this is if a product is, and it doesn't always work this way, but if a product is cheap, usually that's going to, and it's in demand, people naturally want it. Generally speaking, that's going to bring more demand into the equation, right? So let's take, I don't know, Surging Sparks booster box. Let's take Destined Rivals. Destined Rivals is about $230, $240 a box right now, right? If that box got below $200, that would immediately bring a lot more people into the market. You would typically increase the amount of demand, right? So the willingness for me to buy a product is not just whether I like it or not, but it's whether it's affordable in my price range, if there's perceived value there. Now, that's not always true. We talked about this in previous videos where, these toxic assets, these products that are now beloved, let's talk about Paradox Rift, let's talk about Paldea Evolved, Obsidian Flames, boxes that are well over $200, some over $300, and how at one point in time, no one wanted them. So in some way, shape, or form, something can be too cheap and can turn off that demand spigot. And you almost need, again, that self-fulfilling prophecy, that self-fulfilling price action where it starts to gain some traction and the rest of the market sees that price action and says, well, number one, I don't want to miss out. And two, okay, maybe this is worth something. I don't agree with that. I don't think we should trade like that momentum trading. Again, I think we should go back to the fundamentals of, really just, do I like the product? This is a willingness to sell. Specifically at this price, right? So for instance, I'm an investor. If I have Surging Sparks, I think that's what I have on the screen right now, Surging Sparks booster boxes from TCGPlayer. I may not be a seller at $230. If this jumps up to $500 tomorrow, I might be a seller, right? So the same thing that we talked about on the demand side and the purchasing side of things works on the same side in the sell side, right? So again, if a price goes up, that's going to draw more sellers into the market. So if the number of boxes listed, the number of products listed on TCGPlayer, if that drops, the price is probably going to go up, right? Basic supply and demand, and that's going to pull additional supply into the market. So let's look at Evolving Skies here. So you can see 178 boxes listed on TCGPlayer. This got down to about $100 a box. 100 boxes at one point. The price started to jump up, and what happened? That brought more sellers into the market. It enticed sellers who were not sellers at a certain point, a certain price level, to bring their product to the market. So you cannot use the current quantity listed as a churn rate. Again, I think that's completely false. That's just not, the secondary market is a willingness to sell, and that is going to change for people. Obviously, especially folks that are, everyone who's selling a box, regardless of whether you're an investor or collector, wants a return on that product, even if I'm just a collector, right? And I'm looking to get out of this product for whatever reason. Maybe I want to get something else. I want to maximize the amount of money I'm getting out of that product, right? So I'm going to look at that secondary market, whether that's TCGPlayer, eBay, in-person, Facebook Marketplace, wherever, and see what that price is. And it's either checks a psychological box in my head, it checks box, some kind of formula I have, and I bring that box to market. I sell it on that market, or I don't. So this is true of anyone who's putting product in the market, regardless of investing or selling. So this is really a form of price elasticity of supply, where price of a product increases and surfaces hidden or shadow inventory into the market. So this is pretty unique to collectibles, again, where you're going to have a lot of product that's sitting on shelves. Again, whatever the reason for that is, right? It could be it's sitting on store shelves. Store shelves sometimes, local game stores will keep product away for years and kind of have that. They want to have that supply. I have a local game store who has packs from just about every set of Magic ever to have existed, and they have a massive stockpile. They will not sell the boxes. It's specifically for packs. There's a number of reasons to do it, but obviously some of these stores want to capitalize on that future growth of the products. Most of them are so capital constrained, they can't do that. They need to turn and burn through products so quickly. They can't wait for it to appreciate. They need to capture that margin and that volume of moving capital through their market as quickly as possible to be able to free up capital for additional purchases in the future. So price elasticity really is a measurement of the change in demand for a good or service in relation to its change in price. And again, this happens both on, when we say price elasticity of demand, it happens both on the demand and the supply side as well. And this is pretty basic stuff. When prices rise, demand usually drops. When prices drop, demand usually rises. Again, not always the case in Pokemon. It can be too cheap. We've talked about that before, right? So if I guarantee you, if the market turns and collapses tomorrow, I'm not saying that's going to happen, but if it did, there are a lot of these products would be perceived as toxic assets if it got to a certain point, which would snowball the selling to the point, and which would do what, right? It would continue to push that price downward to the point where no one wanted it. And again, I think that's not how I trade, and I urge people, do not trade that way. Just buy what you love and essentially ignore the price. I know that, and that's counter to what, human psychology, right? We want that price, like we want to have things that are worthwhile, especially if it's taking up shelf space. It's very hard for people to get over that. But again, if you're buying what you love, that's why I've worked with people, I consult with people on the investing side of things in Pokemon. And I'm telling you, the people that have made tremendous amount of money, it's not people buying Surging Sparks at 250 now, Destined Rivals at 200 plus, Paldea Evolved at 300 plus. I'm not saying they're not going to make money. The people that have made oodles, buku bucks as we call it, again, we're buying product when no one else wanted it. That's where most of the people I know who have made money in the stock market, they're buying things that are good, stocks that are good, people who bought Meta and Netflix when it had tanked, knowing these are still good companies with amazing potential, right? But they're just depressed for some reason. That's what you want. You want that wild card factor to be pushing that down, right? Scarlet and Violet, when it first came out, we know what Pokemon does in a macro standpoint over the course of 30 years. We absolutely know what that's going to do. So why then would you ignore boxes under $100 a pop if you know the trend on this product? With the upside, what's the downside potential at that point? $0? That means Pokemon's dead at that point. The upside potential to me was too irresistible at the time. And again, to a lot of the people I consult with, it was too irresistible too, and they've made a ton of money. So again, when supply rises, price usually drops. When supply drops, price usually rises. This is pretty basic stuff, right? And this is really a barometer of market sentiment. So, a decreasing quantity listed on TCGPlayer could be a bullish indicator showing that demand is consistently outstripping that willingness to sell supply. And an increasing or stagnant quantity is a bearish or neutral indicator suggesting that supply is exceeding demand, right? So how do we put this into action as an investor or collector? I think the best way to put this is track the trend, not the numbers. So if you were to look at the current quantity listed without any other information, for Surging Sparks, like I said on my midweek market update, it's surprising, like 1,200 boxes. Holy crap, I was shocked. Not because of that number, but because the price really hadn't moved, right? So we have, looking at Surging Sparks, you're at an equilibrium. We can't just look at that current quantity listed. We have to look at the market price, that price over a period of time, and specifically how well it's selling. So we have an equilibrium with Surging Sparks where we're at $229 pretty steadily. And if you look at the chart here in TCGPlayer, you can see that delta, that high and low, that peak and valley of price is pretty narrow. So that it's been trading within a window of about $10 to $15 for the last couple months, right? we see the sell rate is still selling exceptionally well. So you have a product that's quite a few months old. We're about 8 months old at this point, selling an average of 16 booster boxes per day. And you can actually see recently we've had some spikes. So selling still incredibly well. So you're at an equilibrium where, as a seller, there's obviously opportunity here, especially if your cost basis was MSRP or lower. As a buyer, obviously there's demand for the product. There's people, FOMOing into the product. There's natural demand for the product. And you have this that price is a representation of everything here. It truly, really is. Where obviously, if there was more need for the sellers to turn their boxes around quicker, they would be fighting over that price. And what would happen to that price? It would drop. If boxes were not moving at a good clip, if we were selling maybe 5 boxes per day, what would happen to that price? Again, sellers, especially the inexperienced ones, especially the ones that are capital constrained, people who need to free up product to get that liquidity back, that capital back, to put that into something else. Investors, collectors who are gun shy, who are like, I want to move the product, I'm nervous about it, I want out. They're going to want to sell quickly. And if they can't sell quickly, if it doesn't sell in a period of time, specifically a day or two, they're going to drop the price again, right? And if that happens from enough people at enough time without that demand, that price is going to start to fall quicker and quicker. We're at a perfect equilibrium here on this product where there's enough demand, it's moving quick enough so that current quantity is not putting pressure on anything. Again, if an exogenous event, something happens outside of surging sparks, outside of what we just talked about happens to the market, a slowdown in demand, so on and so forth, it's probably going to drop that price. So I would look, as an investor, I would look here and say, I'd be cautious at this price. I think there's other reasons to buy surging sparks at this price. I think it's a fairly decent price. I hate, chasing a product above MSRP. If I didn't have any exposure to it, I'd probably still snag a box at this price. But like I've talked about in the past, I think we are experiencing some wallet fatigue, some slowdown in the amount of spending here. So to see 1,200 boxes, that means a lot of people already willing to sell surging sparks. That to me means it's almost like, to visualize it, it's almost like a weight above the price of the product. And so again, if that demand below it, which is like a counterweight, a foundation, think of it that way, if that starts to erode at all, that weight of the willingness and want of people to want to sell starts to push down on that price. Think of it like that. That price is in the middle. Let me do this here. The price is in the middle. Okay. You have current quantity, the amount of product on the market listed there, and you have the demand on the bottom side, right? And the price is in the middle. So if this weight up top, that 1,200 boxes that wants to move, right? If the demand on the bottom side, that foundation, okay, gravity pushing it down here, if that demand starts to erode at all, that weight is going to, that current quantity of boxes, that willingness to sell is going to start weighing down that price. So I think we do have further to fall on what we see here on the screen, which is surging sparks here. But again, I still think, like I said in my midweek market update video, I think you're probably going to hit probably 215 on this product sometime in the summer, which would be a good entry point, I think. So that's my kind of basics on supply and demand, price elasticity. Again, I think these are some things you can use to, like we just did, the exercise we just did with surging sparks, to say, is this worth it at this price? If I want to have it, maybe that's a good opportunity to hop in. But again, with that willingness to sell, and again, there's an opportunity maybe in the next few months where we could have some price erosion, some people wanting to get their money out, some people getting nervous, right? You could take that opportunity to try to enter, on this product in the future. And again, you can use this exercise on anything else. And again, I think visualizing it, like I just mentioned, is probably the best way to understand it. So let me know what you think of this video. I think this is pretty important stuff. I know it's not the most exciting, it's not hype driven, it's not drama, but this is fundamental stuff that helps people be successful. Let me know what you think in the comment section below. As always, be well out there. Enjoy your 4th of July. God bless America, and we'll see you on the next one. Take care.